CNBC-TV18.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. ShareChat lays off less than 5% of its employees after it shut down its fantasy sports platform called Jeet11, sources tell CNBC-TV18. The layoff will impact more than 100 people at the company. Most employees fired were in non-tech roles and tech employees will be absorbed by ShareChat and Moj, sources added.
Fintech platform Credit B raises $80 million from existing investors Premji Invest, New Quest Capital Partners and Mirae Asset Ventures, among others. Japan's MUFG Bank joined in as a new investor in the round.
Agritech startup Dehad bagged $60 million in a Series E round led by Sofina Ventures and Temasek, along with existing investors, RTP Global Partners, Process Ventures and Lightrock India. The firm aims to break even in the next 12 months, along with 2 to 2.5x growth on year-on-year basis.
PropTech startup Block raises $12 million in a Series A funding round led by its existing investors from Silicon Valley, new strategic investors and angels including Cred's Kunal Shah. The company will use the funds for market expansion, boosting the product portfolio and building data infrastructure.
Paytm gets a thumbs up after assuring investors on its path to profit. SoftBank trims its stake in Policy Bazaar and more than 2 crore shares get lapped up in minutes. Is the worst over for new age companies? A CNBC-TV18 analysis shows share prices of some companies could be bottoming out.
Twitter suspends rapper Kanye West's account just 2 months after it was reinstated for posting the swastika. Elon Musk, who had welcomed Kanye to the platform earlier, says, "I tried my best." Those were the headlines that we're tracking for you this evening. Now, shares of PB Fintech totaling to 5.1% equity changed hands. More than 2 crore shares were sold within minutes after they were put up for sale at a 5% discount. Now, sources say SoftBank is likely to have offloaded its stake after the one-year lock-in period for IPO anchor investors ended on 11th of November.
Moving on, Paytm has assured analysts it is on the path to profitability. The management expressed confidence about Paytm's strong growth and achieving an adjusted EBITDA target by September 2023. The management also alluded to significant pickup in the credit card segment.
So how have these new economy stocks fared so far, and have their valuations hit the bottom? Prashant Nair joins us now to decode these stocks and their trajectory going forward. Prashant?
This is the question. Have new economy stocks fallen enough? Right now, let's just assess the damage first. And I think this is pretty simple, straightforward. This is the listed universe of new economy stocks, market cap at all-time highs and the current market cap. The damage is clear, anything between 50 and 75%. Top of the list, of course, is Paytm, followed by Policy Bazaar. Car trade, of course, very small. Nykaa, which is also now at all-time, almost at all-time lows, Zomato delivery, etc. as well. You know, the next number is what is actually even more, it's stunning and sobering at the same time. This is what these two companies, specifically, Paytm, in its private life raised. They raised $4 billion as a private company before they came to the market. And the market cap after this week's rebound has only come back to $4.2 billion. That is stunning, right? You've raised equity capital of $4 billion, and now after listing, the entire listing process, after a year of being listed, the market cap is basically $4 billion. Car trade, of course, much smaller entity, raised 350, and now it's about 280. Paytm's plunge actually is at a bit of a record as well. These are some of the global companies. The cutoff is 1 year after listing. It ranks as one of the top 4. But it's not just the listed space where we've seen large valuation cuts. You heard how one of the large investors in Byju's wrote down the value of their investment in Byju's. The peak was 22. They say the total company, according to their markdown, is worth $6 billion. That's sharp, right? That's the poster boy. And there are other companies, some very well known, some not so much, but Shop Clues, Practo, Quicker, etc. And you can see the erosion. And by the way, you talk to experts, the general feedback is more markdowns will happen. There is all the incentive in the world for founders and early investors not to do a down round, basically raise money at a lower valuation than the previous round. But if conditions don't change, they'll have to do that as we get into next year. Now, I'll come to the last and the most important bit. What I've done is I've taken EV by sales. EV by EBITDA is not possible for many of these because the EBITDA is, many of these companies don't make an EBITDA. And this is 1 year forward. Listed companies here versus global peers. So look at Paytm, and in the case of Paytm, because they do so many things, I've taken a variety of companies, some in the payment space, some in BNPL, some in the overall fintech ecosystem, and you can see how valuations have come off. Now, it's not the case that others have not fallen. Others have also fallen, but the point is starting valuations. When these companies listed, and if you looked at valuations then compared to global peers, the gap was very wide, and in some of these cases, the gap is narrowed. Look at Nykaa. Nykaa, of course, is still the most expensive. There is Ulta Beauty, there is Bath and Body Works. Zomato up on your screen, again, I mean, 6 times. You look at DoorDash, which is in the US, Deliveroo in the UK, and Meituan, which is the Chinese company, much cheaper, much cheaper. Again, you know, this is just the valuations. We're not looking at delivery, for example. I mean, you could argue and say they're asset light. Many of these other companies are asset heavy. There are differences in business model, and it's not possible to go into all of them, but this is the valuation. Let's just go back to delivery once. Delivery is interesting because I think it's also delivery is at about, what, 2.3 times? You look at YTO, SF Holdings, I mean, 2 Chinese and 2 US companies. Again, they've come off quite a bit. The last is PB Fintech, which will come up on your screen. 6.2 times, and the big one I could find was Goosehead Insurance, which is now at about 5.9 times EV by sales. So again, as I said, this is not a clear-cut answer whether companies have fallen, stocks have fallen enough and they'll do very well from here straight up. But this gives you a sense that valuations in many of these cases are not so out of whack compared to where some of these global peers are trading at this point in time. Perhaps, just perhaps, for some of them, you started the process of some sort of bottom formation.
All right, Prashant, many thanks for giving us a lowdown of how the new economy stocks have fared so far. Moving on, prop tech startup Blocks has raised $12 million in its Series A funding round. The venture claims it is the largest Series A round in the prop tech sector in India. And this round was backed by its earlier Silicon Valley investors and new strategic investors and angels, notably Kunal Shah, founder of Tread. The funds will be used by Blocks for market expansion, boosting product portfolio, and building data infrastructure. To elaborate on all of these plans, joining us now is founder and CEO of Blocks, Aditya Jhaveri. Also joining me will be my colleague Arundhati. Aditya, welcome to Startup Street. Now, while real estate is a $100 billion market in India, the sector is marred by disorganization, lack of transparency, and of course, completion issues. Also, buying a home is a big decision for a family. So tell me how you at Blocks are ensuring transparency and customer satisfaction. Take me through your offerings and what is unique about them.
Thank you, Shruti, for having me. And to start with, I would just like to say that the problem that you have identified is exactly what we are trying to solve. Real estate is covered in a space of distrust and opacity. People genuinely do not know and do not have the required data available for them. They are not able to compare properties fairly. And more than anything else, we firmly believe at Blocks that when you're making the biggest decision of your life, when you're making the largest transaction of your entire life, you should have a delightful and a great customer journey. And that's why Blocks exists, and that's why we started it.
And what are the offerings?
Sorry?
Okay, moving on, if you could elaborate on the offerings and also the fact that Silicon Valley-based investors have doubled down on the investment in this new round. Kunal Shah joins the board as well. What does their backing mean to you and what do they bring to the table? And also, if you could elaborate on some of your key offerings.
Sure. So Blocks is the first platform in India which is transaction ready, and we connect all the stakeholders of a real estate transaction. So if you think about how a single home is bought, it starts with search and discovery. It goes through connectivity. You see 4 or 5 different properties with different developers, and thereafter you shortlist, select a home, do transaction, paperwork, expression of interest, and payments. What we managed to do over the last year is build all this into the tech and basically have a multi-stakeholder platform where developers, brokers, customers, of course, and the internal block system all work in sync to make one transaction, delightful, transparent, organized, and perfectly verified inventory, ensuring safety for the customer as well. Our inventory is listed directly from developers,
All
so we
right.
do not allow open listings, thereby, in some small way, having the ability to tell the customer that exactly what they are getting is what they're looking at.
All right. Aditya, we're running out of time. So if you could quickly tell us, you plan to use the funds for market expansion, boosting product portfolio and building data infrastructure. So elaborate on these plans and what's in the pipeline. What new markets are you eyeing?
So currently we have a significant, we've grown significantly to a good size in Mumbai city. Down the road in the next 18 to 24 months, we would want to go across India and provide this e-commerce type functionality to home buying transactions. On the product side, we are doubling down heavily and we are trying to build the best product in the world, which we are sure that we will be able to build. The most important part of this is an intelligent system driven by data. So we want every stakeholder in the system to have data insights and therefore make the transaction journey as informed as possible for all stakeholders. It will help developers sell better. It will help customers buy more accurately. It will help brokers increase their income, and it will one day hopefully cause delight to a home buyer's transaction.
All right. And Blocks was conceptualized with the aim to democratize real estate. So talk to me about your business growth numbers. What does the road to profitability look like for you?
That's a great question. We are actually one of the players in the Indian startup ecosystem, which from day one has been operationally profitable. What I mean is that on a unit economics basis, since the very first transaction of Blocks till today, we are profitable. Of course, at the EBITDA level, we are investing heavily in technology and marketing. So, basically scale will be a function of us turning entity level profitable maybe in 24 months. Right now, we are going to hit about 300 crores in December on a 1 month basis of sales. And we've scaled this operation in the last 12 months to basically be at a level where we are able to do 300 to 400 transactions, averaging about 1 crore a transaction through our platform. So 300 to 400 crores on a month-on-month basis is where we expect to be in December, January.
Okay. And we wish you the very best, Aditya, for all your growth targets. We've completely run out of time, but many thanks for joining us on Startup Street today.
Thank you. Thank you so much for having me.
All right, moving on. Tea cafe chain Chayos makes a strong comeback post-COVID with 145% revenue growth in FY22. Now, the company has scaled 2.45x to 135 crore rupees in FY22, while the company's losses spiked by 36.5% to 71 crore rupees in the same period, as per an N-Tracker report. My colleague Aishwarya Anand caught up with the co-founder Raghav Verma on the sidelines of the Indian Restaurant Congress and began by asking him where the company deployed its $53 million which it had raised in June this year. Growth plans and more. Take a look.
We've consistently been investing into our technology and we continue to do so. Our tech powers everything from our supply chain to our front end customer operations and also the hardware that actually makes the chai. So all our chais are made by our chai bots. And we've been consistently investing into our tech. We continue to do that. We continue to launch customer-facing applications. We continue to work on our hardware to make it better. So yeah, we've been doing that. We've been enhancing our leadership hiring team, our leadership team. So yeah, work is on.
All right. So on that note, another announcement was that you wanted to add 100 more stores by the end of this year. So could you tell me how many have you opened and what's the target for the next year?
So we don't really share our targets. The 100 stores we are pretty much on track. We are opening stores every month.
Okay.
And we just recently celebrated our 200 store launch a couple of months back.
Okay.
So yeah, just
But you opened in Bangalore, right?
Yes, we opened that in Bangalore. Yes, Jayanagar.
All right. I do want to ask you this. Now, according to filings, the revenues have dropped to 44.8% for FY 2021, right? And the losses have also widened to rupees 52.6 crore in FY 21. So, how is FY 2022 panning out for you, and what is the road to profitability?
So FY21 was an outlier year. It was an extremely disrupted year because of COVID. So I don't think we should take any guidance for the future from there. Our efforts are on increasing profitability at our stores, which is actually progressing very well. Dine-in revenues are back much higher than pre-COVID levels. Delivery has significantly grown. So yeah, we're on track. We're on track with the business plans that we made.
All right.
Yeah.
On that note, I did want to ask you this. Like, I understand that the COVID actually disrupted the business quite a bit, right? Another white paper report has shown that 51% of consumers are ordering less frequently or eating less outside due to the rise in inflation, correct? So I want to understand from you that what kind of revenues are you clocking via your online sales and even your dine-in stores, and which segment is actually leading the growth for the company?
So the answer is both of them are. We don't see immediate impact of inflation or macro environment as of now. The existing stores are performing well. For us, about close to 40% of our revenues comes from the delivery business. So which has grown very well during COVID. Dine-in is now back. So as of now, we are not seeing those kind of signs.
Now, you've ramped up your marketing spends for the rebranding, correct? And you've spent a total of 80% on digital, and the rest was on out-of-home advertising for the first time that you've done. So what is the aim here?
We want to continuously invest into the brand. We are opening a lot of new stores. We're opening a lot of new cities. So the idea is to continuously engage with customers. The idea is to continuously promote dine-in as well as delivery. And we feel that our customers are actually in the digital medium. And out of home just works well for us because the customer on their way to markets, on their way to malls, they end up seeing that outdoor medium, and then they end up walking in. So we've seen a really good response on the brand metrics. Things are moving well.
A lot of 50% of your sales channel was actually coming through the online delivery medium, correct? Now, take me through what your customer acquisition is looking like at the moment. What more is in the pipeline for the company? And is there something in the pipeline? Are you planning to announce something very soon? What can we see Chayo's doing next?
No, I think everything is kind of progressing as per the plan that we've set out. We've just recently launched a select membership program, a Chayo select membership program. We're seeing really good results from that. A lot of our customers are adopting that. And as usual, we continue to launch new products. We'll have a lot of innovative products coming out in winter. That's going to launch a week later. And we're continuing to double down on the customer experience, new design formats of stores. But this is pretty much like BAU. Keep iterating on the BAU, keep making it better. Nothing big and out of the ordinary.
Okay. Some of the interesting. Could you take us to some of your best-selling products that you're seeing at the moment, and some of the insights into the consumer mindset that you've seen develop in this year, like something that you've seen, the behavioral shift that you've seen this year?
So. The product, it's a good mix of chai and snacks. Meri wali chai, desi chai is the one that's still the top seller for us. We recently launched a kesar chai that actually ended up doing really well for us. Good wali chai is our winter product that actually does very well. We've done a couple of airport stores that have actually done very well for us. Airports now is a format that we want to continuously double down on.
All right, airport stores doing well and will double down on the format, says Chayo's Raghav Verma. Time for us to take a short break. Coming up next on the show, AI-powered contact center Rezo.ai has big growth plans, from expansion to newer markets to investing further in technology and R&D. A special conversation with the company founder on the other side. Stay tuned.
AI-powered conversational platform startup Rezo.ai is in expansion mode and set to raise funds by the close of the year, the second such fundraise by the 4-year-old startup. Now, Rezo is looking to tap into the Bharat opportunity by providing customized communication solutions in regional languages and target government enterprises in its next phase of expansion. The company claims it is not burning any cash and is a profitable startup. So let's bring in the co-founder of the company, Rashi Gupta, to talk about Rezo's business model, its expansion plans, and a whole lot more. Rashi, welcome to Startup Street and thanks for being here with us. If you could start by giving us some statistics in terms of your business, how many customers do you currently service, what the daily customer interactions on the platform are like, and how you plan to scale from here?
Thank you so much for having me here. A very quick brief about our clientele. So we are currently serving 15 plus clients. This is across all sector, automobile, banking, NBFCs, insurance. And broadly, we are doing roughly around 15 lakhs of interactions a day. And we are looking to basically increase this, at least twice for the next quarter.
All right. And, what is the opportunity you see in these expansion plans for growth in the rural area? Because the Bharat opportunity, as we see a lot of, growing companies try to tap, and also your plans on targeting public enterprises.
See, we are targeting both, right? I mean, when we are with the help of these enterprises trying to reach out to their customer, these are both rural as well as the urban population that we are reaching out. And if you look from the conversational AI space, right? I mean, the rural population is tapping onto this, technology, conversational AI technology beautifully because, they love to talk, they love to get input, they love to interact with the bot to be able to extract information and actually do the needful. So the urban population as well as the rural population are latching onto this beautifully, and we are working both with the government as well as with the enterprises to be able to tap on this opportunity.
Rashi, you claim that the startup is not burning any cash at the moment and that you're a profitable startup. So could you share your current revenue and profit figures that you're clocking and some of your near-term targets as well?
Yeah, so we are extremely profitable at the moment, right? It's just the way that we have drafted this overall product, and currently we're not even spending a lot on our sales, but I think it's just the kind of work we are doing, we're able to grow. So would not be able to disclose the revenue numbers at the moment, but the idea is, we have big expansion plans. We are currently serving the India market, but looking at the US and the Middle East market for Q4.
All right. So besides India, Middle East and US markets are what you're targeting in the upcoming quarters. With Rashi, if you could also fill us in, because there's not much known about it. How much funding have you been able to raise so far? And we understand you're looking to raise more capital by the end of this year?
That's correct. So, we've raised only a seed round up till now. This was majorly the angel round that we did. But the way that we have grown, majorly we would like to invest in the technology, in the R&D, and in majorly the sales and marketing. And this is a Series A round that we are looking to raise at the moment. Already conversing with a lot of, venture capitalists, and it looks very, very promising.
And if you could share with us, how much are you looking to raise to fuel these expansion plans?
So we're looking to raise 15 million, and this, as the conversations are growing, we should be able to close very good interactions by, beginning of Q4.
Any investors you could share with us that are looking to back the company, to back Rezo?
So currently we are having conversation with some really good ones. I can't disclose the names, right? Our conversations which are happening, unfortunately.
Well, good investors, we'll take your word for it.
Sure, absolutely.
Okay, Rashi, we'll take your word for it. They are good investors. If I were to ask you, what really is Rezo doing differently from the many competitors that you have? Because, the brands that you partner with, the Tatas, Maruti, L&T, and so on, they're also tying up with other AI-powered platforms for, this kind of a business. So what differentiates you? What is your moat?
So for us, the differential is the way that we are looking at the data. So it's core Rezo, if I have to talk about, this is an analytics company, right? The bots that we have developed, the kind of speech engine that we have developed is basically a layer on top of that data. So we are a smart contact center. We do smart calling. When I say smart, we are leveraging data to be able to figure out what's a good time that you will pick up my call, right? What's a good time that you will add to the revenue of the enterprise, right? How do I call you so that, I will be able to tap on you and you will be able to close that conversations with me. So majorly our data, leveraging a lot of data to be able to close conversation, and hence this is our big differentiator, right? I mean, there are a lot of bot companies, a lot of speech engines which are available in the market, but the differentiator for us primarily is the way that we look at the data and the way that we are processing the data.
It's Friday and it's time to take stock of how the startup space fared in terms of new deals this week. 25 deals took place valued at over $440 million. Some notable deals include co-working startup Tablespace bagged $300 million from Hillhouse Capital. Credit B raised $80 million from Premji Invest, Motilal Oswal, NewQuest and others. Agri-tech company Dehat got $60 million in Series A funding from Sofina, Temasek, Process Ventures and others.
That's not all. Software services provider Prism Force backed $13.6 million from Sequoia Capital India, and MoveFarm raised $13 million from the likes of Avishkar Capital, Aditya Birla Ventures and Axel India. Overall, the startup world has seen 1,084 deals this year, valued at over $23.3 billion.
With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side.